This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, August 26th, 2015. Euro dollar. So the market was confined on Tuesday to some inside day price action after that latest surge that we saw on Monday to 17.15. At this point, we need to see a break back above 17.15 to open the door for a resumption of gains towards next key resistance at 18.25 to 18.75. But inability to take out 17.15 followed by a break back below 13.70 would potentially suggest that the market could be poised for medium-term bearish resumption. Sterling dollar. So despite some setbacks in Tuesday trade, ultimately the constructive outlook remains intact, with the market still focused on a retest of that 2015 high from June at 59.30. Really, only a break all the way back down below 53.50 would compromise the constructive outlook for cable. Dollar yen. So dollar yen has seen a severe setbacks in recent trade, with the market stalling just shy of 116 ahead of the latest rebound. At this point, 120.40 and 116.12 are the key levels to watch. A break above 20.40 would put the pressure back on the top side, while a move back below 116 would open the door for fresh weakness in the major pair. Euro Swiss. So Euro Swiss has been in recovery mode over the past several weeks, and the market is intent on trying to break back above recent highs that we saw at 109.62 and through 110 further up. At this point, any setbacks continue to be very well supported by previous resistance turn support at 106.90, while ultimately only back below 105.75 would compromise the recovery outlook in Euro Swiss. Aussie dollar. So Aussie remains locked within a well-defined downtrend, and the market is now focused on retesting that Monday low, that multi-year low that we saw at 70.40. A break below would open the door for a fresh downside extension towards the 68 area. At this point, any rallies are continued to be classified as corrective, with only a break all the way back above 74.40 to compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD continues to race to fresh 11-year highs, with the market now focused on a test of next key psychological barriers at 135 further up. At this point, any setbacks are viewed as corrective, with a higher low sought out in favor of a bullish resumption. Ultimately, the 128.60 low that was seen back on the 29th of July should support any setbacks. Kiwi dollar. So Kiwi is locked within a well-defined downtrend, and the market is now content on some consolidation, though we did see a spike low to 61.30, a fresh multi-year low on Monday. Really, any rallies should be very well capped towards that 67.37 high that we saw going back to the 29th of July, with only a break back above to compromise the bearish outlook for Kiwi. SPX 500. So quite a move for the S&P 500 over the past few days, with the market collapsing and taking out critical support at 2040, 2000, and 1950 to trade all the way down just shy of some support going back to 2014, the October of 2014 at 1819. At this point, look for rallies to continue to be very well capped in favor of what could be additional declines as this market continues to show signs of major topping following a surge to fresh record highs and multi-year surge to fresh record highs back in May. At this point, look for any rallies to be well capped into the 1950 area, while setbacks should extend below 1819. Gold. So gold has been in recovery mode after that recent multi-year low that we saw below 1100, and has traded all the way back up into the 1170 area ahead of this latest minor pullback. But the pullback should be well supported now ahead of 1100, with a higher low sought out in favor of a continuation of gains and a continuation of this recovery, potentially back towards 1233. At this point, only a close back below 1100 would compromise the recovery outlook and put pressure back on the downside.